Welcome in, guys. We'll get started here just shortly, real quick. Just a minute or two, we'll get started. Damn, tomorrow's 0 DTE. Ooh, that might be a fun Friday tomorrow. Alright, well, what's going on, guys? What's going on, Wiley? Welcome in, welcome in. Um, sure, some few others will probably trickle in here, but what a 360 today, I gotta say. I think one of the biggest takeaways so far this week has been what a seesaw. I mean, from the wild price action from starting the week, basically looking like it was gonna start so well. I think Tuesday we were green, Wednesday Tuesday we were red. Yesterday we had a nice little green day. Today a little bit of a dump fest. I mean it was just what crazy price action it is. I think the best day that we had was the 19th. That was 3 days ago. The 19th was, yeah, our lone green day was between Monday and Tuesday. That was our two best days that we had this week so far. But what a seesaw of an event. Um, Big takeaway was also just pretty much out of the price action of what we saw of a lot of these growth stories just being demolished right now. As earnings just kicked off this week, pretty much from the start of just looking at Netflix, how that's been just abysmal. Then next, looking at what Facebook has done back to back days here now. Back to back days of just double digit losses on the day. I think yesterday was down about 16, $17. Today down about another $12. That's just pretty much been abysmal. And then also the other one was pretty much looking at Tesla this morning. We pretty much all woke up to Tesla and we're like, oh, woohoo, Tesla's gonna have a great day. It's up $100, right? Next thing you know, it pretty much just gave you that slow bleed all day after filling the gap to the upside, which I think was right around near about 1094 or so. We saw it try to push that gap to fill to the upside, and that was just a slow bleed through the entire day. But what a price action. And I'm sure some of you actually want me to probably look at some names in terms of long term charts. One probably being AMD, which I know a lot of you pretty much wanted to buy AMD around that $90 level. I'm sure some of you pretty much dipped your toes into it, maybe for long term positions. And that has just been another disaster of a chart as well. So I'm gonna take a look at some of those charts. I think probably key in AMD, Apple. We'll take a look at Shop. I'll see also what Tesla's up to on the long-term chart frames. Basically looking at daily, weekly time frames. Pretty much give you a better scenario, bigger picture. That we're so caught up looking at day to day and the smaller time frames, whether it be at 10, 15 minutes or so, that we pretty much we overlook the larger time frames. And so that's what I'm just gonna take today's price action after just 2 days of just bloodfest. I think it's due that we actually take a look at some of these larger time frames and see where we're pretty much projected to head towards. The other thing that was also the other highlight of the day was also looking at the 10-year bond yield. We had some Fed speakers going on today. I think there was some comments from Bullard, some from Daly. We had the comments out of Powell, which I don't think that really was anything that really caused any kind of havoc in the market or any kind of reaction at all. But we did have some speakers. But the 10-year bond yield was something caught my attention. At one point, we were up about 10 cents on the 10-year bond yield, pushing about 2.94, 2.95, which I actually do have that pretty much shooting up towards about three and a quarter. So 3.25 is where I had the 10-year bond yield also pushing north up at some point. So we'll likely hit that level, and that'll likely be pretty much a very crucial point in the market in which that's going to be maybe a panic mode that the broader market's going to likely take into perspective. So that's something I'm going to watch. I'll continue to keep that in perspective. Transitory, welcome in. You bought UVXY calls. I can't blame you. Pretty much good heads up on your part. I think a lot of us pretty much expected a little bit of our earnings run up. It's really just being south of what that expectation was because this is nowhere close to our earnings run up. A lot of these names, Facebook, Amazon, Apple, all just getting destroyed as their earnings pretty much approach. So that's something that's just been a little bit of a head scratcher, I'm sure, for a lot. But bigger picture is that growth is dead. Valuation is pretty much being keyed in on, and that'll pretty much bring me into my point of where how we saw this Tesla drop off. Right, we had the $100 point move that we had pre-market. We saw it just get sold off. and everyone's scratching their head. But why did Tesla pretty much sell off? Right? They had record-breaking numbers off of their quarter. It's just that the stock has gotten so rich, valuation is getting tighter. Their guidance that they also provided is also going to be under scrutiny now because as thing inflation pretty much impacts their cost, markets trying to start pricing that in right across the board, not only with Tesla but with other companies, because things are going to be costing more, right? As we see, gas is already just premium, just abysmal. I think I just put like $70 in my Cadillac. That's crazy, right? But that's basically what the market's pricing in. Yeah, they had record numbers on their quarter, but their future earnings, basically their next quarter, they're not. They're expecting more pressure to come in, and that's basically what you're seeing across the board, not only with Tesla but with other companies. All right. As far as SPY, as I get into that real quick, just looking at basically, I keyed in on the fact of yesterday in which I had my zone that we are basically just sitting on after yesterday's candle that we had. That 446 up to the 446 half. It's basically where I had that little zone. We were pretty much teetering in and out of that from yesterday's price action. Today we basically lost that. We got up to my resistance that I had sitting up here at that 450 mark, 449 half to be exact. But what we basically made a little bit is a expanding triangle basically, and not triangle, expanding wedge is what I meant to say. A little megaphone action is a better term to say, right? We had a nice little megaphone. We hit right into that resistance of the megaphone at that 450 mark, and now it looks like we're pretty much coming down towards the support of this megaphone, in which that's basically going to put us right down in towards 434 low, and then potentially breaking down to where I have a pivotal support level of 432 is my next level that I'm watching. So that's pretty much what I have us going into tomorrow. I have us coming down, creeping down towards 434, 432 if we break below that megaphone. If we break below the megaphone, you have a little bit of a minor support around 428. That's your next minor support. Um, and I think that's likely where a lot of buyers are going to try to step in for that reversal. But I don't think that's going to hold up. So 428 will be that next level if we can't hold 432. All right. So that's pretty much the key levels that I'm watching. Obviously, you see the zone that we basically just hit right into the zone that I pretty much had there in place. That low 437, and we closed right above it, above that zone, pretty much hovering that 438 flat. All right. So let's see tomorrow if we get down to the bottom of this megaphone. We'll break down towards that low 434, then crack 432. Below 432, we're watching 428. All right. The other scenario that we could have tomorrow is that we could potentially get relief out of today's price action. Granted, the fact that we had back-to-back red days on a Netflix, Facebook, we had pretty much the earlier strong names just rolled over, Microsoft and Apple. They were showing earlier relative strength earlier on in the morning. Maybe we get a nice little bounce of relief in which I'm going to expect to then potentially test my anchored VWAP here. That 442 half is likely going to end up acting as a resistance, and that'll give us a day of relief here tomorrow. So that's the flip side of that, right? If we don't come down towards that 434 low, then we can get a nice bounce and we get up towards that 442 half. And that's what we're going to end up likely rejecting off of the anchor VWAP. So, bigger key to me today was knowing that today was going to continue to be pretty much a trend day. Was knowing once we end up cracking my anchor VWAP, breaking down below that 442 half was like, all right, now we're smelling trouble because we didn't hold that anchor VWAP. Maybe if we would have held that anchor VWAP, we would have got a nice follow through and pushed north going into tomorrow. But that was not the case. Once I saw that I cracked my anchor view up here, pretty much midday that was, I was like, all right, the rest of this is just pretty much, a pit fire. Is basically what I was expecting, and that's exactly what we got through pretty much most of the day. All right, so that's pretty much my key takeaway from SPY. And flip side, whether we play the upside towards the 442 half of the anchor view up, and that ends up being resistance, or we come down to 434, maybe 432 tomorrow. So that's pretty much just both directions there for you. All right. As I pretty much kick it off, looking at basically Apple here. We'll get off up to the weekly time frame. I'll take a peep at Apple. Transitory, you're mad you sold your Facebook puts. It made about a 20 something dollar move on Facebook. I don't think there was a lot of people that knew that Facebook was going to tumble that much, but rather that quickly was pretty much what I would say, right? I don't think anyone expected to tumble that quickly. I think we all knew that it had a little bit more pain in the tank, but I don't think anyone expected it to come this quickly. And it was likely not going to end up potentially coming until maybe earnings, is what I think most people were pretty much expecting. that definitely was pretty much caught a lot of traders off guard, maybe even some hedge funds off guard, just because of how quick and how rapid that was in back-to-back days. So you can't time it. As long as you got out green, that's really what mattered about that. All right. Uh, Same thing with shop. We had back-to-back alerts that went off yesterday off of the cloud alerts, and I gotta say, other than the spy call that came out this morning, the cloud alerts have been, I mean, to me, just a model of consistency right now, and that's really what we are aiming for as we continue to roll those out for you guys. It's just being a matter of consistency, getting out those quick 20, 30% gains, and that's exactly what shop did, and it actually made its full $12 move, I believe it's projected, and back-to-back alerts that it triggered yesterday. I think it was just after lunchtime we had one shop alert, and then about 30 minutes before close we got the next shop alert on that one for the cloud alert, and it gapped down. We saw that nice move down after the open after a few minutes. So beautiful move off of the shop alerts. But again, who would have knew that shop would continue to melt like that? And I'll see if I get the shop's chart off of the weekly or daily time frame and see how much more downside we have on that. All right. But getting back to pretty much Apple, basically what I'm looking at with Apple here off of the weekly time frame is you had this nice little falling wedge action. You probably would have said it's pretty much bull flagging, but a nice little falling wedge. As you saw, we pretty much peaked out of this falling wedge when we broke out. We peaked at that 179.61 level. I think at that point in time, a lot of us were basically looking at that 3 trillion mark to take out that high, that 182.94 back from basically January. But that was not the case. And as you see, we just continue to make basically lower highs, lower lows. And that's what I continue to expect going into next week as they have the earnings coming up. Uh, my next pretty much major support that I have is sitting right at this 157 low, basically 157.40, if you want to get exact, is basically where I'm looking at in terms of retesting the support of breaking out of this falling wedge. So 157.40 is that spot I'm watching. That also basically coincides with a little bit of what I want to say somewhat of a cup and handle you had dating back towards September of last year up until November. You hit that high right around that 157 mark, and that was also a little bit of a support that you had upon the breakout before you had that nice little launch pad there that set up for the all-time highs. So 157 low is basically what I'm expecting on Apple here going into next week. So that's basically going to smell a little bit more blood in the street here going into next week, is basically what I'm anticipating as you continue to basically make lower highs, lower lows, and you get down towards that 157 low. The other thing that I'm looking at is also basically this little trendline support that I have sitting out here as well. It's basically what I'm looking at. And this trendline support that I basically anchored off of is three major support levels that it all aligns basically, right? We have it hitting basically from September of 2020. We also hit the same spot March 2021, and then also June of 2021. So it all aligns with that trendline support, which basically will somewhat come into play here within the next month to 2 months here. Maybe we get down towards that 152-ish mark, and that'll be basically where I want to see if we are able to hold trendline support. Likely some market volatility will pretty much aid into getting down to that 152, or maybe be the earnings that pretty much just plummets this down towards that trendline support. But that 152 to 153 spot is ideally where I'm looking at once we end up cracking below that 157 level. All right. So that's pretty much what I'm looking at. 157 is that major level. We crack 157, then I basically have us coming down towards 152 towards this weekly trendline support that I have built out. All right, so 157 and 152 is basically the two major levels that I'm watching off of Apple as it continues to pretty much regress here. All right. The other one is that I pretty much was going to mention was also AMD. I know this one's basically a little crowded. I know it's also a cheaper play for a lot of you. I think it's been quite of an interest ever since this has just continued to roll over. The high that this basically put in is 164. I think we're basically, you could say it's almost about halfway of its all-time high. And I do have a little bit more downside here coming, right? My zone that I pretty much am sitting at right now is basically right between 86 to 87 is where I have this projected to come down towards. So that gives you about roughly about another, say, what, $3, $4 move to the downside potentially. And how did I end up coming up with that 86, $87 mark basically, right? Reason I ended up hitting that mark is because that actually was a little bit of a resistance point that we had after this major breakout back from August of 2020. That was basically your level. That 87 mark was quite the resistance you hit before you continued to consolidate. That was also the breakout point right back again after you hit that. And that ended up acting as a little bit of pretty much a distribution between November 2020 up until February 2021 before you had a nice little breakdown right yet again. You made this little nice little cup and handle. What ended up acting as your little support off of your handle for this cup was basically that 85 mark. So 85 to 87, that's basically the level I have us coming down towards. I think 85 is ideally that better number that I would feel more safe getting into if it can hold that. I think that's the risk reward is the level that I'm watching here in terms of a short term bounce. So you get this down to 85. I think that's where you look to get a short term bounce. You play this back up to maybe about 90, and hopefully that ends up being a nice little $5 move. But right now, I think you stay clear of this. I think it has further downside, and that basically coincides with Apple just basically making your lower highs lower lows. All right. And then I just have levels pretty much set. If volatility kicks in within the coming weeks, coming months, basically, 74 is another key level. As you see, that's basically been uh, quite a support level between most of 2020 to 2021. That's acted as a hell of a support level, that 74 mark. If we can't hold that 74 mark, then I have it coming down all the way down towards 59 is basically what I'm also watching as well. And that'll be likely with extreme volatility in the market. I would anticipate getting down towards that 59. All right. So hopefully that gives you better pretty much levels on what I'm watching. Looking at prior resistance, looking at prior distribution or accumulation, major breakout points that we had in past years, past months. That's exactly what I'm pretty much dictating as well in terms of those key levels that we had in past years here, basically. All right. Other than that one, another one that's pretty much also on watch. This Facebook chart that I ended up having, I think I pretty much dropped it in ideas. I dropped it on Twitter. It pretty much almost basically played out to the T, and it looks like it ended up moving here. It literally is playing out to the T right now. I'm gonna look to see if we basically double bottom off of this right now. Let's see. Yeah, we're a little bit below. No, we actually it lines up perfectly. We'll see if we end up double bottom, in which that kind of gives us our scenario of a bounce here tomorrow off of Facebook. Back to back bloody days, some massive candles on the daily here. Let's see if we find that support at that 185. We just broke just barely under that 185. Nice bounce into the close. Let's see if we can hold that low of the day that we had here today. And then we start to pretty much get a nice little bounce off of that. And we make our way back up towards that 194 mark. So as we see after hours, it's already up about 2.5%. I think, if I'm not mistaken, Snap actually did well after hours. I'm sure Twitter's probably up as well, along with what Elon Musk is pretty much also rambling about on Twitter. I saw some tweets coming out that he's mentioning on Twitter. So that's pretty much another thing, but it should have a solid day tomorrow. I think that was a very pivotal level that it basically anchored off of today, just wicking under that 186. So I think this one has a little bit of a short term upside. The only thing is looking at the weekly, and this is where I was basically going to get towards, is that we do have some major levels in which, after a short little upside action that we're going to have here, likely getting up towards, I want to say close enough to about 199. I think we'll retest that $200 mark as a resistance. If you remember, $200 was pretty much a mental number just not too long ago. That's a level I'm going to likely end up looking at to see if we test it as resistance. And then that'll basically be your turning point. But some major levels I'm watching in terms of this one, 175 and below 175 will be 161. Is those two major key levels I'm watching on Facebook here. All right. So that's basically what I would point out for that one. And again, 200 being that resistance mark in which we're going to want to see if we can get over or not. All right. Other one, this is the key one here. I'm sure a lot of you were basically watching this one here today. I don't think anyone pretty much anticipated this being how it transpired today. But nonetheless, it ended up giving back all of its gains. I'm going to look to see if we continue to regress off of this one. I do expect us to pretty much retest this 977, 974 mark. That's actually been a very key support level right now. I'm going to look to see if we hold that going into tomorrow and next week. So 974, 977, that's that key level that you want to see it hold. And then we could potentially play the upside there if it does hold. Otherwise, we crack that level. We're coming down to some major support down at 886. Below 886, I'm watching 855 is my next level that I'm watching. And if you also notice, I do have this little gray line that's pretty much going all the way across here. The reason I have this little gray line is because it's actually acted as a resistance support line. It's basically from our initial high that was pretty much your initial peak back from July 2020, right? We also ended up anchoring off of the support twice here from May 2021. You could say a minor support yet again, June 2021. And that was also a major support level that we ended up bouncing off of from March of 2022 here. So that's pretty much acted as a resistance support level. If we get down to that level, somewhere around this low 820 mark, that'll basically be where I want to see if we end up holding. But if we crack that, then this is pretty much going to be it's going to be a waterfall down to the 740, between 740 to 720, in which that's likely going to be aided by some market volatility if we get down that low. All right. But I do like this little pretty much trendline support I have going off of the daily here, and that's basically what I'm going to look at once we get down towards. All right. Other than that one, I think those are pretty much the ones I basically really wanted to cover. I got over. I went through Apple. I don't think I looked at Netflix. Have I looked at Netflix? I'm pretty sure someone had me look at Netflix. Yeah, I think someone asked me on Twitter. That's what it was. So basically, with Netflix, I mean, you had that nice little trend line support. Obviously, you see you broke it. That's a hell of a damn weekly candle. The last weekly candle we had like that was, yeah, this was back from early January. That's just disgusting. But next major support level I'm watching here on Netflix is 197. That's the next major level that I'm watching on Netflix. So I would expect us to pretty much get a nice bounce from this level here right now, after closing today, pretty much coinciding with a bounce that we expect in back-to-back bloody days of Facebook. I expect a decent sized bounce out of Netflix. It'll probably take a little bit of time, but we pretty much will likely make our way up towards 238. Above 238, then we can see this stretch up towards 251, and that'll give us a reasonable bounce before we get that U-turn right back to the downside. All right, so that's basically what I would pretty much watch out of that. The other one was pretty much Shop. Shop has just been abysmal. I mean, this thing has gotten destroyed, and that's literally just destroyed. I had a key little support level here. 518 was that level that I had, was my major support level. We ended up cracking that on this week. So if we do get a continuation, not a continuation, but a reversal, as we see after hours here, a nice little bounce going into tomorrow, then I'm potentially watching that 518 mark as a resistance. Five, I want to say 515 to 518. That basically acted as your support level here back from earlier in March here, before we had that nice little pop and sold off. And that also acted as a little bit of a resistance back from March 2020. So I'm gonna look to see if we get that reversal here tomorrow up towards that 515, 518 mark to be potentially a short. Maybe we get a cloud alert at that level, and then my pretty much my overall major support level I would expect to hold on my downside as this continues the downtrend will be this 343 mark is basically what I'm looking at for the downside action here. So I think this has potential to come down to 343 here. If you pretty much notice, that was basically a very pretty much pivotal level back from July 2019. It also acted as a little bit of a resistance back from this accumulation you had between September 2019 to November 2019, before you had that nice rip, and then it also acted as a nice little support level before you had a launch pad, and we took off from March 2020. So that's basically the key level. Again, going off of where we had major breakout points, major resistance support levels from prior months, prior years. That's basically what's dictating in terms of how low we could potentially go, or major levels that you're looking at for your reversals. All right, so hopefully that kind of gave you ideas in terms of just a sample of, no, maybe the most popular names in the market here, and where we would potentially look to see how low they can go, those levels that you expect the reversals, and that gave you a better idea. Because again, we get so caught up in looking at those smaller time frames, the 15 minute, the 1 hour, we end up not looking at the larger time frames. Those daily and weekly time frames usually give you a better idea of where those prior breakout and support levels are that you really want to watch when you start to get the reversals. All right. So that kind of wraps up what I basically want to touch bases on here today. Hopefully that gave you guys better insight. Sid's the Spiraler will play. I hope it ends up paying. I mean it already hit its invalidation level. I believe so off of the spy alert. It's just a shame. It is what it is. We'll get it. We'll pretty much rework it. We'll get it back working for you guys. We'll see what adjustments need to be made on the Spiago, and we'll get it corrected so that way we can end up getting that working out for everyone. All right. But other than that, I think that kind of wraps up. You just read that. Oh, okay. So other than that, though, kind of wraps up what I basically want to mention going into tomorrow, Friday. I know some of you are maybe gonna take some weekend swings going into tomorrow. So you hopefully you got an idea. If you likely get a bounce tomorrow, I would not try to go long into the weekend. Be honest with you, it's just not. I don't think that the market is pretty much projected in which you want to go against the overall trend of the market. That's basically what the mindset is. I would rather stay cash than try to go against the reversal of the market here right now, especially when the market is favoring the downside more than it's favoring the upside. So, I mean, if pretty much look at it this way, if you saw the price action that we had on Tuesday, you wouldn't have expected that we would have ended up closing out this week so far on a bloody note like this. We had such a strong green day on Tuesday, and then Wednesday and today we just pretty much puked it all out, and we even made better lows here. So that's something why I say just be careful about your swings. I think that's the most crucial thing right now. Your swings will literally destroy you right now in this kind of market environment. That's probably one of the biggest key takeaways I will tell you right now is that be careful with your swings because the day-to-day price action is so drastic. If you actually saw it on SPY today, I think we went up as high as 450 was basically where we were pretty much off of the high of the day and we closed down to 438. Do you see how much of a wide spread that is from 450 to 438? About a 12-point move on SPY. That would demolish your portfolio if you're on the wrong side of that. And that's basically what I mean by that in terms of your swings. So be cautious about that. Volatility is basically elevated, and the range in which your daily range is also pretty much also elevated. So be cautious about that. Other than that, though, I'll call it a wrap right there. I'll stop ranting, but we'll call it a wrap. I'll see you guys on live tomorrow. We'll see what zero DT that the market is going to give us tomorrow. Facebook will likely be on the watch. We'll see if we smack that $200 level. Maybe we get a strong little reversal out of Microsoft and Apple as they pretty much showed some strong relative strength earlier on, and they just got sold off. So that'll be two other names that are on the watch list. But we'll see what else the market really wants to give to us. But I'm sure one thing is probably certain right now is that your social media stocks will likely continue to pretty much grind higher going into tomorrow. I just hope that they don't end up pulling off a Tesla in which they end up selling off right at the opening bell. All right, so that's just something to be cautious about. But other than that, I'll wrap it up. I'll see you guys on live tomorrow. We'll call it a night.